It wasn't a supersized hike, but it's going to be felt in a big way. The Reserve Bank lifting our interest rates by 0.25%, taking the official cash rate to 3.35%, the highest level in a decade. The mortgage stress is piling on for homeowners. A 9th consecutive month of increases and confirmation from the RBA. It won't be the last. Tonight, we've been following the big four banks, watching who's made a move. ANZ was the first to announce it will pass on the rise, followed by NAB just a short time ago. For more, let's bring in money guru Scott Phillips from Motley. Scott, good evening. Just how much is this going to cost us?
Tomo, good evening. There is no easy way to sugarcoat this one, mate. About $118 or so for the average Australian mortgage of $750,000, taking the increase since May to over $1,300. Now, if you've got $1 million mortgage, and some people will be scoffing at that, others know exactly the pain of that, particularly in the eastern capitals, as much as $1,800 a month more since the RBA started increasing rates last May.
OK. Now, the RBA has never been so explicit. More rate rises are on the way.
They are. They talked about the fact they would do whatever it takes. They've been using that language for months now, but this time they talked about increases this year. Now, that S on the end, of course, means plural, means at least 2 more this year. Adding to the one today, that's at least 3 in 2023 and potentially more to come. Those were calling for 1 or 2 rate rises, unfortunately, are going to be on the wrong side of that, and mortgage payers are in for some more mortgage pain, I'm sorry to say. OK, let's look at the bigger picture now. We've seen house prices fall over the past few months. But looking ahead, what can we expect in the housing market? Tommy, you know, I don't do predictions because they're just made to make people like me look silly. But what we do know is that every time there's an increase, the bank manager tells you can simply borrow less money at whatever given level of salary or wages you're earning. The higher rates are, same repayment means you're borrowing less money because of those higher interest payments. That continues to mean downward pressure on prices. No one knows where this stops, mate, but there's a very decent chance. Another 10% or so is probably about par. It could be less if the RBA has cause to raise by less than expected. Could be more, unfortunately, if there are more to come. There's been a lot of reaction, some criticising the RBA's move as aggressive. Are rate hikes the only way to rein in soaring inflation? It's an old question, but it's a good one. Mate, it's a spectacular one. I'm glad you're asking it. Look, honestly, for the Reserve Bank, they have no policy tools other than rates. I made the analogy before. The government's flying an FA-18 fighter jet with heads-up displays and computers and weapon systems. The RBA is flying a biplane. It can go up, down, or stay where it is, and that's it. So when it comes to the RBA, if the governments of the day, plural, do nothing else, then the RBA is left simply saying, hey, inflation at 7.8%, it is too high. We have one tool. I guess that's what we need to use. I would love to see the Parliament and government in particular do more to help the RBA in this process. But if it doesn't, the RBA has very little choice but to say inflation is just simply too high. Higher rates are bad. Higher inflation is worse. That's why we'll see more rate rises to come. OK. And Scott, there is a silver lining for savers, though. We shouldn't forget that, by the way. We spent a lot of time focusing on the roughly a third of us who have mortgages. The numbers are roughly a third, a third, a third. So a third have mortgages, a third own outright, and a third are renting. But to your point, savers are getting paid much, much more on their money than they have been in years, effectively since before the global financial crisis, which feels like a lifetime ago. So, yeah, they are making a bit more money out of it. Good news for self-funded retirees. Good news for savers. There is that silver lining, as you say. Scott Phillips, thank you. Thanks, Omo.